Inflation is one of the key economic indicators that catches attention from analysts to economists to policymakers and of course politicians. Now, India released its inflation data for the month of April. In this video, we'll dive into what's been happening with inflation in India and break down how recent changes in inflation rates might influence interest rates. Now, before we speak about the latest inflation numbers, let's take a moment to talk about the relationship between inflation and interest rates. While moderate inflation is good and can signify economic growth, high inflation can harm both our purchasing power and the economy. In response to high inflation, central banks like the RBI or US Federal Reserve often raise interest rates. When interest rates rise, the cost of borrowing money increases for businesses. This means that companies have to pay more in interest on their loans, which can reduce their profitability. This can also deter businesses from investing in new projects or expanding, which can also slow down economic growth. In response to high inflation that we saw, the Reserve Bank of India has swiftly acted by hiking interest rates. However, the RBI has paused hiking interest rates in response to inflation falling, and the market is now eagerly anticipating a rate cut. Now, diving into the current inflation data. In April, inflation saw a slight dip to 4.83% from 4.85% in March. This decrease was mainly due to drop in prices within the fuel and light segment. However, the picture changes when we look at food inflation. It actually increased to 8.7% in April from 8.52% in March. It has remained about the 8% mark for 6 consecutive months now. Interestingly, rural areas have shown a higher increase in food prices compared to urban areas. Now, let's delve into core inflation, which excludes volatile components such as food and fuel. Now, this metric provides a more clear understanding of the economy's health and also our purchasing power. Now, core inflation has been declining, and in April it stood at 3.2%. The question on everyone's mind is whether a rate cut is on the horizon. Well, let's break it down. Headline inflation recently hit an 11-month low, and core inflation is below 4%. Since September 2023, inflation has also remained comfortably within the RBI's upper limit of 6% and has even dipped below 5% for 2 consecutive months. Now, with these numbers in mind, many are eagerly anticipating a rate cut. While this signals a potential room for a rate cut, there are a few factors that need our attention. Now, one major concern is food inflation, which saw an uptick to 8.7% from 8.52% in March. RBI Governor Shaktikanta Das also highlighted the persistent uncertainty surrounding food prices, which could continue to influence the inflation journey going forward. Now, on the bright side, there's also some optimism regarding the upcoming rainfall season. IMD has forecasted an above normal monsoon, which could boost agriculture production and also help curb price pressures. However, while inflation has decreased, the rural consumption recovery also poses a new challenge. In summary, controlling inflation, especially when a significant portion stems from the volatile food sector, is no easy feat. Now, given the complexity and the various factors at play, it's unlikely that the central bank will rush into cutting interest rates. So while the possibility of a rate cut exists, the uncertainty surrounding inflation suggests that the RBI will proceed with caution. Having said that, this is me, Merlzana, signing off. Take care and stay invested.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com